what if I told you that 124 trillion, more than the entire global GDP, is about to change hands in the biggest wealth transfer in human history, and that women will control the majority of this wealth? Imagine a demographic shift so powerful that it could add 7 trillion to the global economy and completely transform entire industries from sports to healthcare. The financial world is preparing for a massive transformation that most investors completely overlook. I'm going to show you exactly how to position your portfolio to capitalize on this once-in-a-lifetime opportunity. The financial landscape is changing radically. An estimated 124 trillion in US wealth is expected to be transferred through 2048. That's more than the total GDP for the year 2023. Of this massive sum, 54 trillion will be transfers to surviving spouses, with 95% expected to go to women. But inheritance is only part of the story. Today's women are more educated than ever before, entering the workforce at higher positions, marrying later, having fewer children, and taking control of their finances earlier in life. This shift isn't just changing individual households, it's transforming entire industries. In this video, you will learn how reducing gender gap in the labor market can create a $1 trillion economic impact, which industries are being completely transformed by women's growing financial power, how to structure your investment portfolio to benefit from this massive demographic shift, a step-by-step guide to growing your capital regardless of your gender, and most importantly, why understanding these trends is essential for anyone seriously pursuing long-term investment and financial prosperity. So let's start with some mind-blowing numbers that most investors completely ignore. So according to Bank of America research, if gender gaps in the labor market and wages were eliminated, the US economy alone could grow by additional 2 trillion, and that's approximately 7.5% of the country's entire GDP. Look at these charts. The gap between male and female labor force participation has been steadily narrowing, now at around 11 percentage points in the US. And according to Bank of America internal data, the difference in median annual income growth between men and women has fallen from 6.5% in 22 to around 4% now. But here's what's truly interesting. If working-age women participate in the workforce at the same level as men, based on current average earnings, this could add another 1 trillion in wages to the US economy annually. Think about that. This isn't money taken from men, it's entirely new economic activity being added to the system. This is about creating new opportunities for everyone, and the data confirms that. One study found that if more women were working and in management positions in OECD countries, the global economy could grow by up to 7 trillion. Another study indicates that achieving gender parity in employment and wages could increase global GDP per capita by 20%. These aren't just numbers, they represent one of the greatest investment opportunities of our lifetime. I'll share my portfolio structuring ideas to help you capitalize on this growth. And now let's talk about specific industries that are fundamentally changing due to women's growing economic power. So first sector is professional sports. Women's sports have moved into the mainstream arena, and the growth is staggering. The NBA viewership nearly tripled from 2016 to 2024. The 2024 NCAA Women's Basketball Championship attracted almost 90 million viewers, which is 89% more than in 23, and significantly more than the men's championship audience. Sponsorship deals in women's sports grew by 12% annually, outpacing men's sports' 8% growth across the 5 major professional leagues. And here's what's truly mind-blowing. Every $1 that companies spend on women's sports sponsorship generates more than $7 in customer value. This isn't just entertainment. It's serious economic impact. The 2023 FIFA Women's World Cup contributed nearly 2 billion to the global GDP, created almost 40,000 new jobs, and added nearly 1 billion to household incomes. So, next sector is tourism. Women are increasingly prioritizing travel, especially solo travel. Women account for about 64% of all travel bookings worldwide. In 2024, women will spend approximately 125 billion on travel. 85% of solo travelers are women, and companies focusing on female travelers and women-only groups have grown by 230% in recent years. However, perhaps the most undervalued sector is women's health. Currently, only about 5% of global research and development funding is allocated to women's health issues. This means less than 10 billion for women's cancer research and just 2 billion for all other women-related diseases combined. These statistics are shocking. Women live with severe illnesses 25% longer than men. For many diseases, women receive diagnosis an average of 4 years later than men. Cancer diagnosis for women takes 2.5 years longer on average than for men. But these numbers are rapidly changing. Femtech is a new rapidly growing sector addressing women's health, issuing through innovative software, diagnostics, products, and services. This sector's market value is already around 50 billion and growing rapidly. So how should we position our portfolios to capitalize on this massive demographic shift? Here's my approach. The core portfolio section. Core. For the main part of your portfolio, consider allocating 60 to 80% to broad market tracking ETFs like Vanguard S&P 500 UCITS ETF or SPYL Choice, which is Spider S&P 500 ETF, or other broadly diversified options would also work well. So why these are suitable? They track the S&P 500, giving you access to America's 500 largest companies. They have low management fees, allowing your money to work more efficiently. They provide automatic diversification across various sectors, and they have historically generated double-digit long-term returns. This core position is the foundation of your portfolio. It keeps you in the market, ensures stable growth, and helps you sleep soundly even when markets become volatile. Next, satellite positions. Around this solid foundation, you can build 20 to 40% in sector ETFs that can benefit from women's growing economic power. So it might be healthcare ETFs, particularly those with exposure to women's health companies. Then consumer goods ETFs related to luxury, travel and retail. Then sports and entertainment ETFs, including media companies with broadcasting rights to women's sports. Then it's financial services ETFs, companies focused on women investors, innovative financial platforms. Some specific ETFs that are worth considering and that are my choices, I will show you through the Just ETF website. Two of those that I have considered, it's Xtracker's MSCI World Healthcare UCITS ETFs. So it's XDVH by the ticker. You can see it down by the page here. And another one is with the ticker VINX. So it's Global X FinTech UCITS ETF. Both of them are accumulating, and the one FinTech ETF is just recently added to the stock market, so we don't really have the long history to check its returns. They both cost not that much of an amount, because the healthcare choice costs around 50 euros per one unit, and then the other one is as little as 8. What is important for us to check? We're seeing at the total expense ratio, because for the healthcare sector it's really low, it's 0.25% per annum. And then the other fintech choice is 0.60% per annum. Both of them are accumulating, and as noted before, the one for the fintech companies is open only on 2021. If you are considering these ETFs, in the Just ETF website, you can find the fact sheets, which are the most important documents to read before investing, and I talked about them and how to read them in my video here, so please look if you haven't seen it before. And then we go down there, we are going to see how diversified and how many companies are inside the ETF choices. So the first one, the healthcare, has 135 companies inside, and the fintech choice has 58 companies. So you will see the top 10 holdings down here, and here you will see the country concentration in each of these ETFs. So the first one, of course, has most from the sectors in healthcare, and the other one has in technology. So if you are looking for these ETFs in your broker that you're using to get into the stock market, so what we do to have the accurate choice, we just copy the ISIN code. I am using broker Freedom24 for my purchases. So if you don't yet have your brokerage account open and want to get into the stock market, below in this video description, you will find a link that would direct you to the registration to the same broker that I use. What do? We open the account, we go to the trade section up here, and we just paste ISIN code. So it's XDWH choice and also the other fintech ETF. Let's say we want to buy the X-Tracker's choice. We press on that. We make sure that we already have in the account the needed amount of money or cash to buy such choice. Then we choose either we want to buy with market price or we want to buy with a limit price. So if we want to buy with market price, we choose how many pieces, how many units of this we want. As examples, we choose 1 and we just press place by order. It's that simple. So for those who want riskier choices and are willing to add individual stocks to their portfolio, so it should not be more than 5 to 10% of those. So it means you take higher risk and you get potentially higher returns. So you might allocate a proportion to individual picks. So it might be femtech companies focused on women's health, as example, Natera, which has growth potential of 23%. Travel companies creating special offers for women travelers are also suitable. Then we have sports apparel brands actively investing in women's sports, and that might be Lululemon. So you see the growth potential right here. Financial platforms making investing easier for women. This approach allows you to balance stability with more aggressive opportunities while capitalizing on growing market segments. However, here's the key insight. This isn't about women versus men's investments. It's about the massive demographic shift already happening and your opportunity to benefit from this growth across the entire market spectrum. So now for the practical part. Here's my step-by-step guide for building an investment portfolio that takes these demographic shifts into the account. So step 1, assess your financial situation. So you calculate your net worth. It's assets minus liabilities. Determine your monthly cash flow, income minus expenses. Establish an emergency fund. It's 3 to 6 months of expenses. Review your debt situation. Focus first on high-interest debts and eliminate them. Step 2, define your investment goals. Short-term goals, 1 to 3 years. Medium-term goals, 3 to 10 years. Long-term goals, it's 10 plus years. So set specific, measurable goals with deadlines. Step 3, determine your risk tolerance. Consider your age, income, stability, and investment time frame. Be honest with yourself about your psychological comfort with fluctuations. Determine appropriate asset allocation based on your risk profile. And then step 4, establish your core positions. Start with low-cost index funds or ETFs. Ensure your portfolio is well diversified. Consider global diversification strategy. Then focus on consistent, reliable growth with moderate income. Step 5, add strategic sector allocations. Select sectors that will benefit from demographic shifts. Allocate 20 to 40% of your portfolio to these ETFs. Monitor sector performance and adjust as needed. Step 6, select individual positions, which is optional. Research and select companies that are well positioned for demographic shifts. Limit individual position sizes from 1 to 5% of your total portfolio. Diversify investments across several different sectors. Be prepared to hold positions through market fluctuation. Step 7, implement a regular review process. Schedule quarterly portfolio reviews. Rebalance if allocations drift more than 5%. Reassess your strategy annually or after major life changes, and then stay informed about demographic and market trends. And remember, the goal isn't to try to predict the market fluctuations or speculate. The goal is to create a well-structured portfolio that capitalizes on the long-term growth potential of demographic shifts. So now about the risk management. Investors need to sleep soundly at night And proper risk management is what separates successful investors from gamblers. First and foremost, position sizing is everything. Never invest more than 5% of your portfolio in a single stock, no matter how confident you feel. So for high-risk investments, limit positions from 1 to 2%. Second, diversification isn't just an empty word. It's your protection against downturns in certain sectors. Spread your investments across different sectors, regions, and asset classes. Third, remember that demographic shifts happen slowly. So while we clearly see these trends, they develop over decades, not months. Your investment strategy should reflect this long-term perspective. So finally, always maintaining a separate emergency fund independent from your investments, because this provides you with financial security, allows you to hold positions during the market downturns, and avoids forced selling at the worst possible time. Risk management isn't about completely eliminating risk, it's about taking intelligent, calculated risks with proper safeguard in place. So this is the true investor's path. Women's growing economic power isn't just changing households, it's transforming entire industries and creating enormous investment opportunities. So as women become wealthier and more economically active, the entire economy grows. So let's summarize the key insights. Reducing gender gaps in the labor market could add trillions of dollars to the global economy. Women's sports, travel, and healthcare, these sectors undergoing the most transformation. A balanced portfolio approach allows you to capitalize on this growth while managing risk. A solid financial foundation and risk management are essential for long-term success. So whether you are a man or a woman, a beginner or experienced investor, these demographic shifts will impact your investments for decades to come. The only question is, will you capitalize on this opportunity, or will you miss one of the greatest economic transformations in history? If you want to continue learning about these transformative trends, hit subscribe and like this video. See you later. Trillion, more than the entire globe. Down in this video,